Okay, good morning, folks. Good morning, ladies and gentlemen. Welcome to the Wednesday show here with myself, Andrew Lockwood, courtesy of Eightcap. Delighted to be here for my third Wednesday now. So we're getting through the month of February. It's going at a pace, isn't it? Thanks all for tuning in. As per usual, if you are tuning in here, it's good that you interact. Maybe let me know a little bit about yourselves, where you're coming from, where you're tuning in from, and maybe the level of experience as well. It's nice to know that I'm actually not just talking to myself. I do have 3 daughters in the house, and I didn't spend most of my time talking to myself here, but it's nice to know when I'm on the webinars that I'm not only talking to myself. So do try and engage. Let me know your name, where you're coming from, and the level of experience. And indeed, if there's anything in particular you want me to look at as we scan around the charts today. So basically what I'm going to do now over the next 30-35 minutes or so is talk a bit about what's going on in the markets, in the Forex space, in the markets in general. Look at the fundamental sort of catalysts that are driving the markets. Then we'll jump on to the screen to see if there's any trading opportunities, particularly with the way the markets are going at the moment with the dollar strength. And then I'm going to talk to you a little bit about a price pattern which I use in basically all my trend following. Now, I haven't got any slides prepared for it, but we'll sort of talk about it, we'll scan through. But it's basically a very simple sort of price formation pattern that I use when trying to get into trends. If you're here last Wednesday, you'll see I put in some price sort of patterns of sort of the key reversals, very powerful reversal. But of course, you can use these type of patterns as well for trends. So we'll talk about that towards the end. Let's have a look. Request failed with dates first. Okay, so first of all, what I want to talk about is what is driving the markets. For those of you that are new to watching me, I'd like to introduce you now to this economic calendar courtesy of Eightcap. They've only just launched this. It really is powerful. It's one of the best economic calendars I've seen out there, and you can basically get this if you head over to the David Lovell. Hello, good to see you. Morning to you. You can basically get this by going over to your Eightcap login, Eightcap portal, and you'll see the dashboard and all the sort of menu here on the left. Go to economic calendar, pulls up this economic calendar. The reason why I like this economic calendar because it's more sort of inclusive. It tells you more about what is going on with the particular print, whether it's retail sales or consumer prices, what's done in the past. You get a bit of a gauge, a bit of education in there for you as well. Now, as I always say, certainly to my followers, to my trading community at City Traders, even if you're not trading the news, you're not trading these big news events, it's still, I think, very important that you know what is out, what is coming out, what is driving these markets. For those of you that are following the currency markets, you no doubt should be aware of what's going on over the last couple of weeks, certainly in the labor market, the jobs market in the US, and what happened yesterday in the US as well. What happened yesterday, you may ask? Well, I'll tell you what happened yesterday. CPI came in. CPI, which was Consumer Price Index, came in much, well, I'd say much better than expected. It wasn't much better. The markets were going for a drop in CPI down to about 6.2, and it came in at 6.4. So inflation isn't dropping as much as they basically thought, and that basically means the dollar got bid. So if you look at the charts, and we'll look at those in a minute, the dollar is getting strong because of what's happened in the news. So you know what's going on, and you'd have been foolish to get into any dollar trades the moment that was out, released yesterday at 1:30 UK time, which would have been 12:30 in Sydney, or what's that? That's 8:30 New York time. Okay, so this is the economic calendar. You can see here I've selected it to Wednesday, which is obviously today. You can of course change the days. You see here with the follow my mouse, you can see Wednesday, Thursday, Friday. So you can plan your week ahead. I always suggest that you plan your week ahead if you can. I know people have busy lives, but if you're taking trading seriously, and you should be trading seriously, if you want to give yourself half a chance of succeeding rather than just having a little punt now and again, if you are serious about it, I do think you should do this at the beginning of the week, maybe on a Sunday if you can, with your your busy lifestyles, do it on Sunday, certainly Monday morning before the week commences, so you know what's basically going to be driving the markets for the week ahead. Okay, so Wednesday at the moment, we've just had a release of the UK CPI. Okay, so this is the CPI. It came in at 5.8%. Now the forecast, look here, this is what I like about this. It tells you the forecast was coming in at 6.2%. Okay, and the previous was 6.3%. What does this show you? Well, I'll tell you what it shows you. It shows you that the inflation rate is basically dropping. The CPI is this is the year on year. It's basically dropping down to 6.2%. Actually, can I just change something here? I beg your pardon. This is the this is the CPI. I was looking at the core. This is the CPI. This one here. This is the one. This I should be looking at. CPI year on year. It actually came in at 10.1. I thought that's a bit low. 6.2 is what you're seeing in the US at the moment. That was the core CPI. This is the UK CPI. It came in at 10.1. But what's important here? Same type of picture. The forecast was 10.3 and the previous was 10.5. So it's basically showing us that inflation is coming down faster than the markets are expecting. Okay, and that basically means if inflation is coming down faster than it's expecting, it basically means that the UK central bank, the Bank of England, is less likely to be that aggressive on its rate hiking cycle. Okay, so you know they've been moving rates higher as they have across all the developed world to combat this massive inflation problem that the globe is suffering from at the moment. But of course, the talk and all the economists and analysts, excuse me, at the moment is how much how much more they will raise rates. Are they going to stop raising rates, in which case the currencies may start to see a pullback. So this is basically giving the markets cause for belief that the UK maybe will not be raising interest rates as aggressively. Now, I'm not quite sure why that's a big shock for the markets, because Bailey, who's the governor of the Bank of England, has basically said inflation is going to drop like a rock this week, not this week, but over this year. He didn't use that expression, but it basically means that inflation is coming down at quite a pace this year. Okay, it's coming down. So what's happening today in the markets, you saw it briefly on the momentum meter a moment ago, and I'll show you that in a second, is that the British pound is under pressure. Okay, so British pound is under pressure at the moment. That's basically why you need to be keeping across all this economic news events. I won't go into too much on this now because I want to get onto the charts, but I will tell you out of the US this afternoon, we've got some high impact news in the form of retail sales in the US. It's always an important release. If you do scroll across, you'll see high impact. It's normally put out in red. That basically means it's more likely to have an impact in the markets. Anything that's green is low impact, and you see here the orange is deemed to be sort of medium impact. So keep an eye on the high impact news events, retail sales coming out of the US. You know what it's like, the US, biggest economy in the world. When the US sneezes, the whole world catches a cold. So the whole world, the whole markets always look to see what's happening in the US as their sort of benchmark, their guide, if you like. Now, on that note, yesterday we had the CPI come in the US, much, as I say, less than expected. And the US dollar, well, say the drop they were going for was at 6.1% on CPI. It came in at 6.4%. So now the markets are believing that the Fed are not going to be pausing their interest rate hikes anytime soon, and there's more hikes to come, and indeed the rates will stay higher for longer because the inflation numbers are still there. Now the retail sales numbers is a good sort of supporting bit of information on that. If the retail sales are high, okay, and they're looking here for month on month at 1.8% retail sales, okay, if that's coming in at 1.8% or it exceeds that, it just basically means people are still spending money on the high street. Yeah, retail sales, it's people spending money. If people are spending money, it's inflationary. So these numbers are going to support the decision for the Fed in their interest rate policy. Having seen, I don't want to get too fundamental here, but if you look to what happened a couple of weeks ago in the US employment, remember non-farm payroll came in at almost 517,000 more jobs added. Very tight labor market. Inflation's not coming down as quick as they thought. Retail sales numbers today may come in stronger than expected. If it does, this is all going to support the case for a stronger dollar. So you can format your trading strategies around that. And that's basically why I think you need to be looking at the news events. And of course, you've got other stuff in here as well. So I'll leave you to look at this in your own time. You can always reach out to us here if you want more information on that. If you want to go out to the rest of the week, you've got Thursday, Friday as well. Just while I'm on the news front, beware, we've got Australian employment later tonight, UK time. It's about midnight tonight. Let's have a look exactly when it is. It's going to be Australia. Yeah, it's going to be at 12:30 London time, which will be well, in the morning, obviously in Australia. I haven't got the clock sorted out. There we go. 12:30 will be 11:30 in Sydney. So basically, so keep an eye on that. So if you're trading the Australian currency pairs at the moment, you need to be aware that tonight you could see a big move, in the Australian currency pairs. Again, be aware of what's going on. Okay, so let's have a quick look then at what the markets are doing. As I said to you, what's happening in the US. This is driving the US dollar stronger. US dollar is this green line. Now, I don't know how anyone trades the currency markets without looking at something like this. It basically tells me what currencies are strong, what currencies are weak. Unfortunately, it doesn't predict the future, but it does tell me where the money is flowing. And the moment the money is flowing into the green bag. I coloured mine green. You can get this by going to the Trading View. I think I've spoke this a few times now, but I'm only on for a couple more times. So I want to get this out. You can get this by going to a momentum meter for 8-cap currencies on your Trading View, or if you're using MT4, well, you can get really get my version, but you need to head over to the City Traders on that. I do believe, by the way, that 8-cap and Trading View, there's been some collaboration there, so it's going to be very soon that you'll be able to trade the 8-cap platform via Trading View as well. But maybe they'll be announcing that at some point. Maybe I've spoiled their thunder there by announcing that, but I understand it's going to be very soon that you can trade the 8-cap. And I'm looking forward to that because I trade 8-cap as well with my trading. I also use 8-cap as my prop firm. City Traders is a prop firm. If you're looking to get funding, if you're looking for us to support your trading in terms of funding your accounts, you can do so. We use the 8-cap platform. I've got a deal collaboration with 8-cap for that. So we will fund your accounts as long as you can prove you can trade. If you can't prove you can trade, well, that's where we come in. Anyway, so there we are. So the dollar is getting stronger. Ordinarily, the dollar against the euro is the most actively traded currency pair. Normally, you'd expect the euro to trade lower when the dollar trades higher. At the moment, what's this showing me? Well, I'll tell you what it's showing me. It's showing me at the moment that the dollar is looking strong, but so is the euro looking strong. So taking the dollar out of that equation, it shows me that the euro is a strong currency at this moment in time. Now remember, I'm a day trader. I'm looking at the short time horizons. I'm only looking at the next few trading days. I'm not looking in my day trading. Of course I do in other portfolios, but in my day trading I'm looking normally short term, days out, possibly within intraday as well. So at the moment this is showing me that the euro is strong. Okay, it's showing me that there is buying going into the euro. Normally with a dollar strong, you'd expect the euro to come back down because it is the most actively traded currency. So the euro might be on your radar over the next few hours, few days, maybe the end of the week, for potential to trade stronger than the other currencies. Well, on that note, what do you sell against it? Well, we've just seen you've got a falling of inflation in the UK. Well, whether that's right or not, I don't know, but let's just take this down to the 1 hour chart so I can see exactly what's happening on the 1 hour. It shows me here this white line. This is the white line. See my crosshairs? Okay, all the way back down. The white line, that's the British pound. Well, if I'm looking for an edge in the market, Yeah, and that's all that trading is. That's all we're trying to do as day traders. We're looking for an edge in the market, actually a slight edge to make money. If that's the case, am I not better off by buying the strong currency, the euro? Am I not better off by selling the weaker currencies? At the moment, the pound is weak, the Australian dollar is weak, the commodity currencies are weak. All of them are heading lower. Look, Canadian dollar, pound dollar, New Zealand dollar, Australian dollar, all looking weaker at the moment. And the strong currencies are the dollar and the euro. So I'm not saying this is what you should be going out and doing. I'm saying that's where my eyes are going to be focusing on in terms of a bias today. So let's have a quick look then at some of these currency pairs that maybe is affecting at the moment. So we said the euro against the pound at the moment. Okay, so the euro pound is looking as though we could be in for a continuation of an uptrend. Okay, so let's just take this down down the time sequences. So on the bottom right here, I've got the daily chart. Okay, so always do your top-down analysis, looking at the bigger picture, not trading off it, but looking at the bigger picture. I want to see where my big roadblock resistances are. Okay, I want to make sure that I don't trade into a massive roadblock resistance. Well, we are coming into one. Let's be fair, we are coming into one, and this is going to be a consideration of mine if I'm looking to be trading this to the upside. Remember, I said that the bias is for it to trade higher. Well, I've got to consider whether do I want to buy this now? We've had a nice little move, or are we going to respect this level 88, basically sort of 90 zone? Remember, I want an edge. I want to take every trade as if it's my most and only trade I'm going to make in the week. The highest probability trade. Am I going to take it? I like the trade bias, but am I going to buy it into this roadblock resistance? Possibly not. So that would be factoring into it. Then, of course, you can go down to the lower time frame charts. I like to have the 4 hour up there, to be honest. I don't know, I was messing around earlier. And the lower time frame charts here on the 1 hour. This is typically how I'd set my charts up. So I've got the daily, 4 hour, and my trading chart, the 1 hour. You may drop it down to the 15-minute chart. Nothing wrong with that. I have been trading the 15-minute charts before I came onto this space, but I'm just so busy now doing the sort of the education and the prop stuff and what have you that my trading is less. I've got no problems with that. I've been trading for 35 years. It's nice to be doing other stuff as well. But I used to trade the lower time frame charts. Now I just stick mainly to the hourly charts. So yeah, I like the bias, but I'm not going to take that trade. I don't think it's there at the moment. I think maybe the euro against a softer currency. Oh, by the way, while I'm talking about softer currencies, what I did fail to mention was the Japanese yen. Now, the Japanese yen, again, I just want to briefly touch on the fundamentals. This is the yen down here. There's a new governor of the Bank of Japan has been sort of nominated, and they have basically sort of pulled out all the dirt on him over the last 10 years, and it maybe is that he is going to be a little bit more dovish than thought. So basically not so good for the Japanese yen. So the Japanese yen has been trading this week as a softer currency. And if you're looking at that, then buying the dollar or buying the euro against the softer Japanese yen is something that you might want to look at. Now, this is a bit more interesting for me, the euro against the yen. In fact, this is a lot more interesting for me. First of all, I've got my daily chart here. We've taken out roadblock resistance. We've taken out any significant resistance roadblocks. A little trick for you. I know I'm sort of hopping between topics here, but a little trick for you. If you're looking to find your levels of support and resistance on the higher time frame chart, if you want to avoid all the noise, take this out to the line chart. Okay, that's all you need to do. Look for those big A's and the big V's, and you can draw your lines in there. Okay, so that is a big roadblock resistance. The next one, I can put it in a chart, actually, put it in the line up there. Next one's there, and we've also maybe got one up at, I would say, that's one I've been talking about in the trading room for a while. It's our target for the week, our weekly target, and you've got your support zone down there. So that's a great way to just basically plot your support and resistance. Once you've done that, don't want to plot too many in, then you can obviously go back to your candlesticks. So what I'm interested in here is we've taken out the resistance. That should now act as support on the way down. Then I can go down to the 4 hour chart and see that more clearly. Look, double top taken out. We've pushed up through there in the last 4 hours. We cleared it. Okay, that should act as a support zone on the way down. 142, 60 to 70 should act as support. If you're taking long trades in here, you're going to have stops below this swing low around the 142.30. Okay, I've got my bias. I'm building my case going forward here. You've got a strong dollar. You've got a weaker Japanese yen. We've cleared roadblock resistance to the upside. Okay, now looking to the 1 hour for my entries. And in fact, this is one of the patterns that I wanted to talk about at the end of the stream, because it's a classic pattern here. And I haven't traded it because I wasn't on the screen at this time of the day. But this is, well, there's one coming in now, actually. What I was looking at a moment ago, and this, I might as well talk about it now. This is the pattern I'm looking at. It's basically, it happens all the time. It's a 1, 2, 3, and you look towards that pattern there. If you see that pattern for trend continuation, I love it. It's basically an entry for me. Okay, so basically hitting the high, it pulls back to the previous swing high. Get familiar with that pattern. Yeah, it's something that happens more, more in an uptrend. Of course, you're pulling back to the previous high, and we are seeing one at the moment. Okay, so let's take that one away. We've got another one going here on the hourly chart. Okay, the same type of thing. Here we go. We're taking a high here. We're pulling back. Where are we pulling back to? We're going left. We're going left, previous swing high. The trend is up. We've confirmed it on the higher time frame chart. We've confirmed it on the daily. We've confirmed it on the 4 hour. We've cleared roadblock resistance. We're seeing price action patterns here now at this level. I would expect on the lower time frame charts, for entry. Remember, when you're trading lower time frame charts, you have tighter stops and tighter profit targets. You would have your stops below this swing low here. So you've got stops below 142.30 for trend continuation higher. We've got the level of resistance up to 144.50. Remember, on the daily, okay, oops, daisy, excuse me. And on the daily, I'm looking at my target. My target is 144.50. Okay, that's good. The stop is going to be below that. Your entry is going to be around the 142.90. Okay, you're going to have a stop below 142.30. So you've got about a 60 pip stop. That basically gives you 150 pip profit target with a 60, 70 pip stop. That gives you a better than 1-to-1 risk reward ratio. They don't all work. I would encourage you, if you're listening in here now, don't just go and take this trade as I'm speaking, because this is just one trade. Remember, trades are not made, trading careers are not made on one trade. We have losing trades, I have winning trades. All I'm doing is looking for an edge, applying a strategy. If you're trading on the back of that, it's just one trade. If you judge me on the back of one trade, then, well, you shouldn't do. All I'll say on that, it's a strategy. Strategies play out over time. They don't work on every trade. Trading is all about the laws of probability. Some work, some don't. The law of large numbers. Anyone that's been following me for any length of time will know that I'm always talking about the law of large numbers. It's not all about one trade. It's just about the number of trades. The more trades you do, letting the edge play out over time. But that is a classic entry in the euro against the yen. I like it on all levels, but don't just trade it. Just put it on your. I'll tell you what you should do. Put it on your notepad. Put it on your whiteboard. Put it on your demo account, and see how it plays out. And look for that pattern again in those type of strategies that I've seen, with all those rules aligning. Another one, obviously, what we're talking about is the would be the dollar yen. Okay, the dollar yen, another little one. I mean, this again, we've cleared the roadblock resistance on the daily. Where's my target for hang on a sec, that was the euro yen and the dollar yen, almost the same levels, aren't they? Right, dollar yen, okay, same type of thing. Dollar yen 130. Where's my next level? Well, I've really got 134.50. Again, I'm going to my line chart here. Going to my line charts to plot my levels. I'm looking at this V shape here, and this A shape there. I'm looking at this zone here as a potential target. Okay, call it 134.30 or 50, something like that. 134.50. Remember, the line chart takes out the highs and the lows. It just looks at the closing price on the daily. Who wins the battle on the daily chart is very, very important. So there is my target. Lower time frame charts. We've cleared that double. It's almost exactly the same, isn't it? As the euro. I just take some of these off while I'm confusing you for my previous analysis. But we can keep that one in there because we like that as a level of resistance. Just move it up there a little bit. There we go. Yeah, so here we go again. We've got the same type of pattern here. We hit the high, no trend. No trend goes in a straight line. No trends will always, just the nature of trading, trends will always go, with pullbacks. That's the way markets move. Traders take profits and so forth. So we like to get on a trend, not on the highs of candles or on the bottoms of candles. We wait for the pullback into previous structure using that price pattern that I love. That's the 1 hour. Let's go down to the that's the 4 hour. Let's go down to the 1 hour chart, and you'll see it happening again. We've confirmed the bias. We've confirmed price is strong for the dollar. We've confirmed the price is weak for the yen. That's a bias, yeah. Even if one of those currencies gives up, we've still got one currency working for us. Yeah, and you see this trend confirmed. Yeah, swing low, swing high, pulls back. Where's it pull back to? Pulls back to the previous. There it is. That pattern I want you to. No, I want you to. It's entirely up to you. But this is the pattern that I love to trade. Swing low into the previous high for trend continuation. Stops below profit targets at your. We said what did we say? 134.50. For some reason it's not on there. Didn't carry across onto the 1 hour chart. But it's a 134.50, which is basically up and around there. So here you've got a stop of about 60 pip stop, and you've got 40 pips to the upside again. Decent risk reward, following the trend using price action at these levels was also key. I mean, look, I mean, yeah, I mean, you can confirm these with price action as well. I'm just looking at this bullish engulfing here at the moment. But there you go. I mean, you'll agree that old resistance often acts as support. This zone in here, where we had the previous swing low around there, should act as support. If it doesn't, fine, we'll get out of the trade. It doesn't always work. We've got a reason to get in, we've got a reason to get out. Plan your trade and let it play out. Problem with traders, I don't know how many people are listening into me at the moment. How many have we got? Oh, we've got quite a good number then. I don't know if you guys were here with me last week, and hopefully you'll be here with me next week. If you are, I'm going to set you a little challenge. Okay. Most people will fail in this challenge. I've seen it time and time again in my 6 years being in the education space. I've been in the markets for, well, since I was 18. Look, long time. Yeah, I've seen it time and time again. People are unable to do this. I'm going to set you a challenge. Do this for 25 times. Yeah, find 25 setups. You can do it on a 1 hour chart, you can do it on a 15-minute chart, do it on a 5-minute chart, and record your results. Record your results. I bet you will give up after about 6 or 7 when you have a couple of losers, it doesn't work, and what have you. People can't follow their own rules, let alone my rules. So most people cannot. I call it this 25 trade challenge. Most people will fail in their trading because they haven't got the discipline, patience to follow anything with any consistency. I will challenge you to go and try and look for these setups and start trading them on a demo account on a 5-minute chart, using the 1 hour and the 4 hours time as higher time frames. Try and trade it on a 5-minute or a 15-minute. There'll be plenty of setups with the trend. You won't have the momentum meter necessarily to help you, and that's an added bonus. We might do, you go to TradingView. But that's basically a challenge for you to try and do that for 25 times. If you're here next week, my last Wednesday, come back and say that you've tried it. I tell you what, I'm going to hold you to account now. Drop it in the chat. Just give me a thumbs up or say I'm on it or something like that, that you're going to take me up on that challenge. David Lovell, what about you? You're going to take me up on that challenge? Other than everyone sitting there not saying anything. Let's see. Take me up on the challenge. Ewan Walker, he's in. Good to see Ewan. David's in. Ewan's in. Thanks for that. Let's have a look here. We've got trying to see. Aaron's in. Good stuff, Aaron. I can only see one message at a time. I don't know what's done there. Let me just change the screen here. I can only see one answer at a time. This is my first time I've done this on this platform. So maybe my producer listening in can tell me if anyone else is in. I've got 3 taking me up on that, and I can't see the rest of the answers, but that's all right. Oh, Roger's in. Roger's in. Good stuff. I don't trade 25 in a week. I know you don't, Roger. Well, I don't know you don't, but I appreciate you don't, and it's nothing wrong with that. Nothing wrong with not trading 25 times in a week. Trading less is often best. We know that the biggest problem when it comes to trading in general is the emotions, and it stands to reason that the more you trade, the more emotions you will have. I get that. I think it's it's one of the biggest things I say to traders when they're starting off in trading. Crank it up to the higher time frames. Trade less. Less is best. But what I'm doing in the challenge is dropping it down on a demo account, only demo, for heaven's sake, please, only a demo. Drop it down to a demo account, drop it down to the time frame so you get these setups, and record them. The challenge is, are you able to do the same thing, the same price pattern for 25 times and record the results? Yeah, most people in this market, in this room, I would think, are looking to be traders long term. Yeah, I want to be here doing this in a year's time. If you are, let's take it seriously. Spend a few hours doing this. All right, okay, that was the thanks for that. I'll look forward. I'll hold you to account on that. So I'll see you next week, so you can confirm that you have indeed taken part in it. I'll ask you next week. Hang on, let's have a look. Who have we got confirming this? We've got Roger, Aaron, David, Ewan, PT's in, Ian's in as well, and David's in. So that's 3 of you. Thanks, Ian, Kirk as well. Good to see you all doing it. All right, anything else? Let's have a look. So we had the Euro. What about the Euro Oz? Has that got anything showing? The Euro Oz. Okay, so let's just go through the same analysis here on the Euro Oz. Remember, Aussie, we've got numbers out tonight, so be careful of it. I'm going for the higher time frame chart. Okay, I got nothing really up until 55.90, and then we've got massive resist. We've got massive resistance coming in there, and I'm actually just going to make a note of that for myself, to be honest, as well, which I'm just going to do. This is just for my own personal. I'm just setting myself an alert there for my own trading before I forget. There we go. Okay, so let's have a look here. That's just for my own stuff. Euro Oz. Okay, higher time frame chart. We are looking at not a massive trend. Okay, that's the only thing on that, but we are trading higher on the 4-hour chart. Okay, so we are, I mean, we've just broken out of range. It's not a great currency pair to trade, I'll have to say that, but just in terms of the price pattern, maybe if we went down to the 15-minute chart for the exercise of looking for these patterns. Okay, well, swing high, swing low, pulls back, not a great one. For trend continuation, not really. Not there. Most of you get one on the 5-minute chart, I'd have thought. Let's have a look on the 5-minute. But again, the other thing about trading, guys, don't just drop a curve, drop it down to find a trade for the compulsion to be in a trade. If there's no trade, there's no trade, yeah? You don't just drop it down and say, oh, there's one, and then start going off the 1-hour chart down to the 5-minute chart in your real life trading. You've most probably got a mild one. I said I don't like this one as the best one to trade. You've had it pull down, and I mean you got one there. I mean it's basically it pulled back into the previous support. You got a bullish engulfer. You could have taken a long trade there. Where's your swing low? There's no real swing low. Not a great one. I will scrub that from my analysis. No problem. Not taking the Euro Oz. You've got to find the clear ones. What about what else is what about Euro Pound we've looked at. Again, let's have a look. Okay, what about the what about Pound Swiss? And then we'll look at Pound Swiss, and then we'll wrap it up. Pound Swiss is going to be here. Again, Pound Swiss on the daily. Not a massive trend in that. We've broken out of the support zone. We're in a bit of an uptrend. Not really. No, nothing going on there. But anyway, you got the idea of what we're looking at. So hopefully you found that useful. I'll be back on Monday looking for the weekly review, see what's in store for next week. So tune in for that. If you don't make Mondays, then of course I'll be here next Wednesday for the finale, same time on Wednesday. When I'll be challenging Roger, David, Aaron, Ewan, PT, Ian to basically give us your answers or your findings, I should say. Beware of retail sales out this afternoon in the US. Beware of, I think we got producer prices as well. Beware of the Australian job numbers out overnight. And then you do have Governor Lowe speaking, following on from the unemployment numbers in Australia, which is going to be important because he will then basically map out where he thinks interest rate policies will go in the future. So very important for the Australian currency over the next 24 hours. Keep an eye on that. He was on the wires earlier defending himself, which was what I found quite amusing. But anyway, he'll be talking about policy later today, so keep an eye on that. Okay, folks, thanks for your time. Appreciate you dropping by. We'll see you very soon, and have a good rest of the week.